Why shouldn't you invest in Singaporean real estate? That's going to be the topic of today's video. So before introducing the topic, if you're an expat in particular, but also a high net wealth individual, don't hesitate to contact me at infuriated.com. Now, a lot of people think that Singaporean real estate is a great asset to own because it's done well in the past, but I'm going to talk about why maybe you shouldn't buy Singaporean real estate. Number one, most expats in particular are not going to live in Singapore long term. Now, when it comes to locals, of course, that's not going to be the case, but for expats, most will leave Singapore within 3 years, 5 years, or 10 years. Now, some will stay for 20 years or more, but the majority won't. And that means that with a lot of the costs that are associated with property, you're going to have to see a decent capital gains in that period. Number two, linked to that, the costs are quite high of owning property compared to other assets. You can pay 3% or more upfront. Number three, also partially linked to that because taxes are part of costs. The taxes are higher than some other assets. Now, Singapore has a territorial tax system. That means that if you invest in, say, real estate or stocks outside of Singapore, usually you don't pay tax in Singapore even as a resident. So if you buy foreign real estate or certain types of foreign stocks, even if you make a dividend, you don't usually have to pay tax in Singapore as a resident. But if you buy a local asset, it's actually not that tax advantageous in all circumstances. Now, number four, with a lot of the things that are going on in the world, like a potential global corporate minimum tax, it's very hard to know if places like Singapore and Ireland and Hong Kong will be more affected than some other countries. And number five, a lot of the performance is already baked in. A lot of people will do so-called performance chasing, but that's a mistake because if you think about it, what real estate market has performed very well in the last 30 years, say the Chinese market. But in the early 90s, hardly anyone thought buying Chinese real estate was a good idea. Or look at London real estate. People think, oh, it's such a great investment, but between 1900 and 1960, it produced hardly anything adjusted for inflation. So things go in cycles. So just because the Singaporean property market has done very well in the last 30 years, doesn't mean it's going to do well in the next 30 years. In fact, it makes it less likely it's going to do well in the next 30 years. So I think the bottom line is better options exist. Unless you're just buying it as a home because you're going to settle in Singapore, I would avoid it. How can I help you? In two ways. First of all, are you an expat, a high net wealth individual, or just somebody who lives in a part of the world where it's difficult to get access to quality investment solutions? In which case, go onto my website on infuriated.com and find out more. If you don't fit into any of those categories, then in which case there's a range of free material on my website, on this YouTube channel, and indeed on my Quora, where I get over 200 or have received over 231 million views in the last few years. And finally, if you want to actually read my thoughts in more detail, go onto Amazon and find my book on there.